Hey, good morning. Let's go over today's trade plan. So first of all, we are rolling over to the ES December contract this morning. So all the levels for today are for the ES December contract. So just make sure that you have rolled over on your platform and on your charting platform and on your trading platform, because on your trading platform you probably have to change the symbol to actually put in the symbol for the December contract. Alright, so that being said, today is rollover. We are going to be using 78.5 to 80.5 as the micro bull bear zone. Yesterday we saw some pretty decent buying and a decent rejection off the support there, but at this point, we need to see that momentum continue because, we've seen a pullback in the overnight session and we're at an inflection point. But at this point, if buyers don't really step in here, then it would invalidate the strong move that we saw yesterday, and then we could just get a continuation lower on the downside. So this 78.5 to 80.5 area is important short term, and how the market reacts to 78.5 to 80.5 will give us a clue on just which way this market could be going. So we're going to use this as the micro bull bear zone. If the buyers can hold it here, then on the upside we can see a rotation back up to 82.75 to 83.75, and then beyond that we have initial resistance at 87 to 89, and that's really the key resistance on the upside. That's the spot where the buying shut off yesterday. That's the major high volume node in the current range, and that's really the spot that buyers would have to take out to really confirm that they're in control and for us to start seeing some higher prices. So 87 to 89 is the major inflection point on the upside. And on the downside at this point, if 78.5 gets taken out, then we can quite easily go down and test yesterday's low and even extend beyond that. So in the event of a break and hold below 78.5, and if we're seeing some decent momentum and internals are quite weak, then on the downside we can get it pushed down to 71.75 to 73.75. That's still an area where buyers could step in, but at this point it would be a just another test of that zone, and we've already tested it yesterday, so it does call for some caution because we could get range extension below that initial support zone. But first test we can still see some short covering, some rotation. So 71.75 to 73.75 becomes the primary downside target if we fail to hold here at 78.5 to 80.5. And below that we have support 68.5 and 65 to 67. And that's still a spot where buyers can be active. So in the event that we get a range extension lower, 65 to 67 can still attract buyers. In the event of a extreme liquidation move and a range extreme, 57.75 to 59.75 is a major support zone in the S&P. We have naked VPOC there. We have an open gap, a pretty big high volume node down there as well. So 57.75 to 59.75, in the event that we just liquidate and completely invalidate yesterday's upside momentum, then that zone would still have a possibility of coming into play, and that's the spot where again we can see a pretty aggressive buy response. So as far as on the day time frame, we're not seeing any major catalyst on the economic calendar. So even though I'm discussing some of these zones that are pretty far away, we would have to see it in real time in order to look for a move all the way down to, for example, 65 to 67. So we would have to gauge the momentum in real time and then see how the market reacts to initial support to 68.5. But below this micro bull bear, we'll just know that the control is back on the sell side, right? And again, that major upside momentum that we saw yesterday, then that idea would get invalidated, and we'll start focusing again on short setups. So off the open, let's keep an eye on 78.5 to 80.5, see how that plays out. As far as Nasdaq goes, it held up a little bit better than ES, but Nasdaq actually put in a stronger move than ES anyway yesterday. So in Nasdaq on the downside, keep an eye on the 63 to 66 area. That's short-term support in Nasdaq. And again, if Nasdaq starts holding there and pushing higher, then that would also be an indication that perhaps we're not going to get a lot of continuation on the downside in the S&P. And in that case, we may just balance within a range because there's no major catalyst to really, drive the market big one way or the other. So those are the main thoughts. Let's see how well the sell side can maintain control below the micro bull bear, and then let's see if buyers can still step in at that initial support zone like they did yesterday. So those are the main ideas. Aside from that, it is rollover, which can be a little bit extra choppy, and gauging the volume situation becomes a little bit more difficult because it's split between two contracts. So for that reason, it makes sense to be a little bit more selective today and just be a little bit more cautious on your trade setups. So let's see how the market plays out today and take it from there.